Hi guys, so today we're going to look at the Nikkei index, right? The Japanese Nikkei index. This was suggested by Jerome in the group. So I'm going to do a quick analysis on the index in relation to my own thinking, right? So we all know the Japanese index is correlated to USD JPY. You see, that's the main aspect that you need to take into consideration. Meaning, if it is correlated to the movements of UJ, then we can say they are positively correlated. That means when Nikkei index goes down, USD JPY also goes to the downside, right? So we can see here on this chart, I've got a correlation chart here. So we've got the blue line representing USD JPY, and then the magenta line representing the Nikkei index, and you can clearly see that there's a positive correlation going on since way back, all the way from 2006. You can see here UJ was going to the downside, Nikkei index also going to the downside. In late 2023, you can see March 2023, in fact, we had a rally in the Nikkei index. Same applies with USD JPY. It also rallied to the upside. Right now we're seeing market making a turn to the downside after trading to some extreme highs on the UJ and both the Nikkei index. So basically you should know that these two are correlated, positively correlated, meaning when the Nikkei index goes down, USD JPY also goes to the downside. That is crucial because most of you guys here now understand how USD JPY is affected by the dollar. The directional bias for UJ is easily attainable if you just know where dollar is heading to. And right now I think we are starting to see signs of a turning point in dollar index, meaning we are looking to go to the downside. So when you're looking at, say, the Nikkei index, then expect it to face a bit of huge resistance on its current price, and market should tend to the downside. So I've got a monthly chart of the Nikkei index here, right? So the reason why I'm using TradingView is because if you go to MT5, right? Let me just go to MT5 and open my Nikkei index chart, right? So monthly, you can see that it's only going up until 2018. It's not loading data before that. But now if you come to TradingView, you can see it goes all the way back to 1949. We're talking of World War scenarios there, World War time zones. So that's the main reason why I'm gonna use TradingView, just to get my extreme pricing points first. So for instance, you can see here we're talking of 38,820, right? You see that price point, 38,820. That's on the monthly chart, right? So I'm gonna come to my MT5 here, 38,820. Let me just get that correct. Yeah, 38,820, and then the high so far that has been recorded is plus or minus 4463. 4463. The reason why I marked 1820, I'm sure you've already seen that. So here 4463 3. This is the extreme high. Right, MT5 just missed it a bit. MT5 price point just missed it a bit. That's the thing with these retail platforms. So you can see that the extreme 40,463 and then 38,820. That's the old high, the recent, not even recent, this is 90s old high, which the current price has reached that level, and now chances are very high that we are going to see movement to the downside. You see, chances are very high that we're going to see price move to the downside, most probably to January highs. You can see why I'm marking January high. So I'm gonna go to the MT5 now. Then this is January highs, right there, plus or minus. Yeah, the price points are not gonna be equal, guys. You can always do that on your own when you're doing your own analysis. So you can see the imbalance that we have currently, this level here, right? That's your draw on liquidity. If you are to look at the range, you've got internal range liquidity of buy stops on the current low, right? There is buy stops there on the current low. We also have this imbalance here, right there. I'm just gonna mark it for class purposes, and remember, this is an index, it moves, right? So there's no reason of not highlighting it. So this is an old high, so we're talking of the old high from what is this month here, June 2023, where the breaker and price pushed to the upside. So those three crucial points that I've marked: number one, this whole imbalance between the low of the current month of March and the high of January. That is crucial. That's your target for shorting opportunities. So with the dollar showing us signs that it wants to go to the downside, UJ is going to also go to the downside. So preferably, the ideal scenario is for you to be looking for shorting opportunities. If you're going to trade the Nikkei index, ideally you need to be hunting for shorting opportunities, right? So I'm going to go to the weekly chart. I'm going to go to the weekly chart, right? On the weekly chart, you can see what we have there. We've got our bearish order block. So we've got our weekly bearish OB, right? It's not that much of a high probability because it's not accompanied by a fair value gap. Now watch at this inefficiency here, right here. You see, this is what I want you guys to perfect, right? Most of you guys now understand institutional order flow, now understand how to analyze a chart, determine where the market is being drawn to. So that's the imbalance on the weekly chart, and it's inside the imbalance on the monthly chart. So the chances are very high price is gonna fill up this imbalance, maybe this week or sometime next week. So ideally you need to be hunting for shorting opportunities on Nikkei index. You need to be hunting for shorting opportunities on Nikkei index, targeting internal range liquidity of sell stops. You need to be targeting internal range liquidity of sell stops. So that's the draw on liquidity. Market has traded above an old high for the past week ago, right? This is our current weekly candle, right? A week ago you can see the price was trading right above 38,820, and now we have gone back below 38,820, we also have 4463 there, which is our, let's say, our all-time high from 1990, right? An all-time high from 1919. You can see price has now created a what? A bearish order block there on the monthly chart. So hunting for shorting opportunities from premium is the ideal scenario that you need to do when you are trading this asset here. So inside the weekly bearish order block, we've got our daily bearish OB there. Now expect price to find a bit of support on this daily bullish OB. You need to have a breaker, daily breaker, price breaking and close below. But now ideally you can see that this level price is going to trade through and fill up this imbalance, right? So hunting for shorting opportunities is your ideal scenario. This level should also offer opportunities for market to go lower. 38,875. What is 38,875 in relation to our institutional order flow? 38,820. You see, so you'll be looking for protraction phase most probably along these lines, and then price should push towards 37,250. So that's how you have to approach this asset. Ideally, I think shorting opportunities are ideal on this index here. Remember, the Japanese economy is most reliant on what's happening on the US side of the story, right? So monetary policies that are done by the Federal Reserve, they will affect the Nikkei index. And of late, recently, say the past maybe, from last week, I think last week, we've had some rumors now. There's stories coming out that the BOJ, Bank of Japan, might look to increase rates for the first time since 1997. Is it 97 or 2007? I cannot remember correctly. It should be 2007. They've not changed their negative interest rates. And you can see how that has affected the Nikkei index. Since those rumors started circulating, the Nikkei index dropped to the downside. And if you look at UJ, right, if we go to UJ also, on that same sentiments that were coming out from Bank of Japan, this is the end result. Market has turned bearish. So that's the same thing that you need to take into consideration when you are looking at Nikkei index. So for now, ideally, you need to be hunting for shorting opportunities from premium levels, right? If you go on to H4, you are going to get a whole lot of premium arrays, right? That's the price action of an index. So I would rather advise you to use the daily institutional order flow. Any premium array on the daily, on the weekly, on the monthly is bound to provide resistance to price for it to push to the downside. So to answer your question, Jerome, my 2 cents thoughts on the Nikkei index. If I'm to trade Nikkei index at this moment in time, I'll be leaning towards looking for more shorting opportunities, targeting weekly imbalance as my take profit levels. So I hope that gives you a bit of an insight, a bit of understanding on the Nikkei index. It is correlated to UJ. When Nikkei index go down, USDJPY goes to the downside. So a bearish dollar should conversely provide pressure on the Nikkei index. So that's pretty much about it, folks. I don't want this video to take much of your time. So for those who are going to watch it, please kindly give it a thumbs up, and you can share on your social media and all that, so that we get more people involved on this discussion. So yeah, I wish you guys good luck and happy trading. Thank you.